please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, before we get to the political developments of the day, here's more on the top story that we are tracking for you this evening. Quarterly earnings from Reliance Industries. The oil to telecom major has had a solid Q3 with net profit up 25% from year-ago levels. In its main petchem business, both gross refining margins as well as petchem margins have come along expected lines. But the bigger story is with Reliance's latest telecom venture, Jio. It has turned in a quarterly profit for the first time, and this comes within a year and a half of its launch. CNBC TV18's Naveen Shetty joins us now with a breakdown of Reliance's numbers. Naveen, Jio turning in a profitable performance this quarter. What's driving growth and how do the overall Reliance numbers stack up?
So, Shireen, on all parameters, Reliance has given a strong beat. So, I'll begin with the most important point, as you clearly point out, that is Jio. So, Jio has reported a PAT of close to 504 crore rupees versus a loss of 272 crore on a quarter-on-quarter basis. And even the EBITDA for Jio has come in at 2,500 crore. What has driven the growth? Clearly, the operational leverage that has started kicking in for the company. Also, the IOC charges, which had impacted Bharti Airtel earnings, that seems to be not being a dampener for the RIL Jio numbers. The other important point to note out will be the petchem margins. Remember, the petchem EBIT has come in at 5,700 crore. The highest estimate on the street was close to 5,150. What has led to an improvement in the petchem margins? Clearly, the product mix that has been improving. In this quarter, the product mix has improved to the paraxylene versus naphtha, which has led to the overall EBIT margins improving as well as the volumes. The third important point being GRMs. Remember, we were expecting a GRM around the $11.6 per barrel. Bang in line is what the company has posted in terms of the GRMs. So that has also come in as a positive. The other smaller vertical, that is their retail vertical, over there the company has posted an EBIT of 487 crore. Again, this has come in as a sweetener because the overall, if you see the street expectations, the highest again year was around 375 crore rupees. So overall, this has led to a net profit of close to 9,400 crore. All these things, and I think on Monday itself we should see a dark green on this stock. Back to you.
All right, Naveen, appreciate you joining us. That's Reliance Industries for you. Standard disclaimer on your screens. Network 18 and TV18, the companies that operate CNBC TV18 are controlled by Independent Media Trust, of which Reliance Industries is the sole beneficiary. But more on the earnings calendar. HDFC Bank reporting a solid 20% jump in its quarterly net profit. The surge comes on the back of a 24% growth in net interest income, which is its primary revenue driver. Ritu joins us now with the fine print. Ritu, it's been a fairly stable quarter for HDFC Bank, but there's been a slight hiccup on the asset quality front. Take us through that.
A strong quarter from HDFC Bank this time around, with profits rising over 20% on the back of a very strong growth in net interest income as well as other income. Net interest income, which is the core income of the bank, that grew by about 24%. This was also supported by a very strong growth in advances of 27.5%, led by both the retail as well as the corporate segment. Net interest margins are fairly stable at 4.3% for the bank, an industry high actually for compared to some of its other peers. Deposits were up about 10.1%. Non-performing assets rose marginally in this quarter for HDFC Bank, with gross NPAs at 1.29% and net NPAs at 0.44%. But the most interesting part of the results was really the divergence disclosure for the year FY17, where the bank said RBI had noted a divergence of 2,052 crore rupees. Of that, which comprised of 3 accounts, of which one account of 1,707 crore rupees was upgraded in this quarter, on the back of a meeting, a joint lender forum meeting held in December, on account of the fact that the account had been regular for a period of 1 year. We understand from sources, and we had reported earlier, that this is the JSPL account, which, after being standard for a period of 12 months, has been upgraded by the banks. The reason for the RBI audit on JSPL was not because of defaults on payments, but to do with the implementation of the 525 scheme, something that was confirmed by the management without naming JSPL per se. But all in all, a good set of numbers from HDFC Bank.
All right, Ritu, thanks very much. But HDFC Bank is not the only outperformer from the banking space today. Kotak Mahindra Bank turning in a stable set of Q3 numbers, a 17% jump in net interest income and a rise in fee income, helping the bank deliver a 20% growth in net profit along expected lines. The pleasant surprise came in on the asset quality front, with gross NPAs dropping to 2.31%. Gross advances, gross NPAs stood at 2.47% in the previous quarter and 2.42% a year ago. ITC reporting an inline set of earnings for Q3. Net profit jumped 17% on a yearly basis, but this was mainly due to a one-time gain of 413 crore rupees arising from the write back of the Tamil Nadu entry tax after a favourable order by the Supreme Court. Overall revenues jumped about 6%, driven largely by the FMCG business because the cigarette and the agri business have been going through a rough patch. ITC's hotel business has also seen a robust 10% growth over the quarter. And we're not done with earnings just yet. In the IT sector, it's been a bit of a mixed bag. Wipro turned in a disappointing performance with dollar revenues coming in at just over $2 billion. That's met street expectations by a whisker. In constant currency terms, growth came in at 0.9% against 0.3% last year, but the company failed to meet street estimates when it comes to rupee revenues and margins. Wipro has given a dollar revenue growth guidance of 1 to 3% for Q4. The Wipro management will join us at 9:30 p.m. tonight, so stay tuned for that. On the flip side, HCL Tech reported an earnings quarter that showed stable growth. Net profit came in at around 2,200 crores, beating street estimates. Both dollar and rupee revenue growth at about 3% were also above estimates. Margins did see a slight contraction of 10 basis points, but the company has maintained its growth guidance on both constant currency and margins for the next year. But speaking of earnings, all of this was what the markets had to contend with during the trading hours, and it made for interesting movement on the Lal Street. On the whole, bulls continued to rule the roost. Indices shut sharp at record closing highs for the 9th time in 15 trading sessions. The Nifty breaching 10,900 intraday, closing 77 points higher. The Sensex gained 250 points to end above 35,500 for the first time, helped by solid report cards from banks. The Bank Nifty closing over 1.5% higher, but the mid-cap space saw volatility, and the day ended with that index reversing losses suffered early in the day, ending about 1% higher. Understanding by now to decode the day's market action. Anuj, it looks like the bulls are determined to party through the weekend.
Phenomenal day for the market to cap off what's been a truly historic week. And really, the point here for the market is that the big boys are making a bit of a comeback. In fact, this week you had the Bank Nifty, which was up about 4.5%. Others are also chipping in. It's not that others are not participating. Today, in fact, even the mid-caps reversed, though for the week, mid-caps are going home with some bit of losses. In terms of stocks that led the market today, financials, of course, clearly right on top. So stocks like Yes Bank, Indiabulls Housing, ICICI, State Bank, Kotak, Axis, they were all higher. Other index gainers included names like Reliance, TCS, and Adani Ports. In the earnings corner, we had some big movers. Jubilant Food today was easily your stock of this earnings season so far. NIT Tech and Cyient also did well, of course. Biocon, Group Finance, Indiabulls Real Estate, some of the other gainers. So the market's message is very clear. It's climbing all walls of worries, making new highs. Dips are lasting for 1 or 2 days, and if they are proving to be great buying opportunities. That's been the market's message. We are in a bit of a melt-up phase ahead of budget.
Anuj, many thanks for joining us with that. But the GST Council has slashed rates on more goods and services. This is going to leave the government with a hole in its finances. How much? We'll tell you when we return. Well, here's a CNBC TV18 exclusive. Yesterday's move by the GST Council to cut rates on 29 goods and 59 services may be good news for consumers, but it comes at a cost. The cost the government's already strained coffers may be hard-pressed to bear. CNBC TV18 Sapna Das joins us now with more details. So, Sapna, between the rate cuts that were announced in November and the rate cuts announced yesterday, what is the impact on the government's finances?
Well, we are given to understand that the impact of the GST rate tweaks that have happened right since the month of August in the current financial year may lead to a potential revenue hit of around 30,000 crores. Now, some of that has already started reflecting in terms of the GST collection numbers, which have shown a bit of a dip in the last 2 months. Having said that, well, this will definitely impact your indirect tax kitty estimate, which is at 9.27 lakh crores. So that may be below 9 lakhs now. However, the interesting part here is that probably the government may not be too keen to keep a lower revised estimate on February 1, and this reflection may only come at the time of the actual collections, which will happen after 31st March. Having said that, this potential impact of rate cuts to the tune of around 30,000 crores, well, they're trying to balance it out somewhere through, increased basic customs duties. A couple of hikes have happened the last couple of weeks, and also what they're clearly indicating is that there is no thinking even to further lower the excise duties on petroleum products, at least for the moment. So, both these things have to be kept in mind, and we have to wait and watch and see how the numbers really pan out. A quick point I'll add over here is that, the March GST collections are only going to reflect in the month of April. So that is also going to be a big concern for the government. Had that not been there, probably this 30,000 crores would have been absorbed by the budget.
All right, Sapna, appreciate you joining us with that. The big corporate story, partial relief for audit firm Pricewaterhouse. The Securities Appellate Tribunal, or SAT, has refused to lift a SEBI ban on the company. However, the tribunal has offered partial respite. Remember, last week, SEBI had barred Pricewaterhouse from auditing listed companies for 2 years after a probe into the Satyam accounting fraud case. Now, SAT has allowed the audit firm to serve its existing clients whose financial year started on the 1st of January 2018. Yash Jain, who joins us now with more details on that story. Yash, so temporary partial relief for PwC?
Well, certainly some relief for PwC, as the Securities Appellate Tribunal, or SAT, has brought an interim stay with respect to market regulator SEBI's order against Pricewaterhouse and the other Indian partnership firms of PwC. Now, why is it an interim stay? If you remember, market regulator SEBI had barred Pricewaterhouse and the other Indian partnership firms of PwC from conducting audits of Indian listed companies in the Satyam case. Of course, this was challenged by PwC before the Securities Appellate Tribunal, and the SAT today has intervened and allowed PwC and Pricewaterhouse to conduct audit of 8 listed companies of their 8 clients as stated by the audit firm before the tribunal, whose accounting period is between Jan 1st to December 31st, 2018. Of course, PwC has also been asked to submit a list of all these 8 clients, to which market regulator SEBI will be filing its reply, and the case will be next heard on February 13th.
Thanks very much, Yash. Pricewaterhouse has responded to this. Their statement reads, and I quote, "We're happy that the Securities Appellate Tribunal has expressed its intention to resolve our appeal against SEBI on an expedited basis and has set an expectation of a tight timeline of 6 weeks to dispose the appeal. The clarification that current engagements can continue through the year is welcome." End of quote. Well, the big story that is coming in from the political front, the Aam Aadmi Party has been served with a blow by the Election Commission, which has said that 20 of its MLAs stand disqualified for holding an office of profit. The Aam Aadmi Party, meanwhile, has gone all guns blazing against the Election Commission. We caught up with Saurabh Bharadwaj, the spokesperson of the Aam Aadmi Party, earlier in the day. He termed this as a desperate measure by the Election Commissioner, K. Jyoti, just before he retires. This is his, the AAP stake is that this is his signing off gift for the government. Listen in.
We were being told by other sources that, the central government will try to do this before Rajya Sabha election. However, they could not disturb the government, and 3 of our MPs are going to Rajya Sabha. Probably this is a desperate effort by the central government through a Gujarat cadre IAS officer, Mr. Jyoti, who has served Mr. Modi in Gujarat as a principal secretary, as a chief secretary. On Monday, he is retiring from his post. It is the last desperate attempt of Mr. Jyoti to try and disqualify AAP MLAs on this Friday. We condone it.
Well, that's the Aam Aadmi Party's reaction. They have now been rebuffed by the High Court as well and are likely to move the Supreme Court. Rupashri Nanda joins us. Rupashri, this is a setback for the Aam Aadmi Party. What is the strategy now since the High Court hasn't really been very welcoming?
The Aam Aadmi Party is first going to exhaust all its legal options, and the party is cautious about getting any kind of relief from the High Court. It is not extremely optimistic about getting relief from the High Court. The High Court will continue to hear the case on Monday, and then after the High Court gives a decision, and if it goes against the Aam Aadmi Party, then the party is going to approach the Supreme Court. It will not be a very easy decision for either the High Court or the Supreme Court to take, given the background of this particular case and the kind of allegations that have already been made. Remember, one of the Aam Aadmi Party MLA's strongest allegation is that the Election Commission did not actually give them a hearing. And some of the Aam Aadmi Party MLAs had actually submitted their replies in writing, but perhaps not all of them. According to the Aam Aadmi Party MLAs, was done because the High Court was hearing a parallel case on whether the Election Commission can still continue to hear the case after the High Court had quashed the notification of 13th March 2015, which appointed MLAs as parliamentary secretaries. So it is a complicated case, and the Aam Aadmi Party's MLAs will continue to remain as MLAs until the president gives his assent. So there's quite some distance to be traveled before you look at a possible by-election in Delhi. But then that option also cannot be ruled out.
All right, Rupashri, we'll have to leave it there. Appreciate you joining us with the latest on the political developments in the national capital. But today is a big day for us here at CNBC TV18. We've got Nuriel Rubini in Mumbai and currently in conversation with CNBC TV18's Lata Venkatesh. Listen in.
Mostly to the corporate sector, the corporate tax rate cut from 35 to 20%, and mostly to high net worth individual, have been boosting actually the stock market further higher and has gone to even higher levels. You're asking me the question of whether eventually this rise in income and wealth inequality may lead to a political backlash and resentment that is going to lead then to more populist policies like restriction to protectionism, migration, and other ways of micromanaging the political system, that the private sector, that will be negative for economic growth and for the stock market. That's a risk over the medium term. In the short run, of course, these tax cuts have boosted further the business and the investors' confidence. But I think that one lesson we've learned is that this populist backlash against globalization, trade, migration, is in part driven by this rise in inequality, and this rise in inequality is driven by globalization, trade, migration, and technological innovations that tend to be skill bias, labor savings, and so on. And therefore, that's a risk that we have to address. If we don't address it, eventually those who are left behind are going to vote in a way that's going to be damaging of economic growth and of the stock market.
Okay, I'll come to the medium term in a bit, time permitting. But more near term, we're seeing a fairly rapid slide in the dollar. If the US corporate sector is so healthy, and the tax cuts are going to make it even richer, how do you explain this dollar slide over the last 2-3 weeks? It's been particularly surprising.
It's not just been the last 2-3 weeks, but if you're looking from the beginning of the Trump administration, after an initial blip upwards, there has been something of a weakness of the US dollar. Now, the value of the dollar depends on relative growth rate, relative monetary policies. And what has happened has been that the Fed has been hiking, but it's been hiking very gradually. While right now there is a signal that some of the other central banks that they were involved into unconventional monetary policy may gradually phase them out. The ECB has cut their purchases from 60 billion per month to 30. They may end up this plan of quantitative easing in September. They might start hiking right after that. So what matters is that the policy path of the Fed has been already priced in, while there have been now surprises on the upside in Europe, in Japan, and other advanced economies suggest a different path of monetary policy. Secondly, growth has picked up in the US, but growth has picked up even faster in Europe and some of the advanced economies and emerging markets. And since valuations in the US are high, since PE ratio has been high, while they've been for the last few years depressed in Japan, in Europe, and in emerging markets, money is now moving slightly out of the US market and goes in Europe, Japan, and emerging markets, and that leads not only to equity rally, but also some appreciation of this currency, like in the case of India, where the foreign direct investment and the foreign portfolio investment strengthen the currency, but also strengthen the stock market. And I'd say the final reason why the dollar has been weak is that until recently, the market believed that the Fed was wrong, that the forces that have led to low inflation are not transitory, but are permanent. Technology, globalization, trade, weak labor, weak union, all these innovations make goods and services cheap, the phenomenon of Amazon crowding out and competing against other retailers. So if these forces that lead to low inflation are global and they are permanent, the view that the Fed is going to hike 3 times this year, let alone 4, maybe far-fetched. The Fed might hike only once or twice if inflation keeps on surprising on the downside, and the market did not believe the Fed, and they believe the Fed is going to do less than what the market is predicting, and that has been also a source of potential dollar weakness.
But is there a vulnerability there? Do you think that sometime in the first half of 2018 itself, we could see some smart rise in the dollar? Is that a possibility?
It is certainly a possibility. The question is how much U.S. growth is going to pick up relative to other advanced economies, how much the Fed might surprise on the upside, inflation surprise on the upside by hiking not only 2 times, not only 3, but even more. As I said, the value of the dollar depends on not just what monetary policy growth and inflation are in the United States, but also what monetary policy growth and inflation are in Europe, in Japan, and other major emerging markets. You know, in the case of many emerging markets, actually, their currency appreciation may be affected also by the foreign exchange and intervention policy of the central bank. The RBI actually reacted this past year to the strengthening of the Indian rupee by intervening quite aggressively. The amount of reserves has been significantly increased, and there has been even forward intervention, and the appreciation of the rupee, given the capital inflows, would have been even stronger if that intervention had not occurred. So another variable to keep in mind is how much central bank going to do verbal intervention initially and actual forex intervention as a way of limiting or reversing some of those appreciation pressures. Central banks in emerging markets do intervene. The Fed does not intervene in forex markets.
Okay. Yes, the Fed doesn't. After all, the weak dollar is not the Fed's problem. It tends to be other people's problem. But Dr. Rubini, you alluded to the recovery, global synchronized recovery in all countries or many major economies. Do you think now we are stepping into a new normal? There was this new normal from 2008 to 2017 where we thought we will never get to 3% or 3.5% global growth. Do you think we are starting a new normal where we could be in the 3.5 to 4% growth globally for a longish period?
Well, that's in my view is an open question, because the conventional wisdom of IMF, OECD, and most economies had been that potential growth, both in advanced economies and emerging markets, has fallen in the last few years. It's fallen because of the legacy of the global financial crisis, high debts, and the need to deleveraging, because capex spending has been low, and therefore a lot of productivity growth is embedded in new capex. Productivity growth has been mediocre. Demographic changes like aging, not in India, but a significant aging of population in advanced economy, US, Europe, Japan, but also in some major emerging markets like China, like Russia, like Korea, and so on. All these are factors that imply that potential growth has been lower, and that's why the IMF was talking about the new mediocre. Today there is a global expansion. Growth is accelerating in some countries, going above potential, and as long as there is slack in goods and labor market, growth can be above potential for a while, even if potential is low without causing inflation. So some of this recovery may be just cyclical, and whether it is going to increase also potential growth is open to question. Some people say if it becomes persistent, there's a significant increase in capital spending, then productivity growth can increase. That's going to increase potential. Other people are more skeptical about that. We don't know yet the answer of, and another important thing has to happen is that this good moment for the global economy should be a period not of complacency, but countries should be doing the kind of economic reform and structural reform that increase potential growth. We need structural reform in Europe and Japan, but we need them in the United States, we need them in China, we need them in India, we need them in Russia, in Brazil, in most emerging markets. But we know that the political economy of structural reform is that they occur always more slowly than desired and optimal. And therefore, I think that's a necessary condition for having a pickup not just cyclically of growth, but also of potential growth. So I think the jury is out on whether this is just purely a temporary cyclical recovery or the beginning of a more positive trend for the global economy.
Okay, a final quick question on the world, and then I have a question on India as well. Is there a threat, or is there a possibility, what are the bets, of crude being, say, $80 in 2018? Are the bets very high?
Well, you know, oil prices have been rising in the last few months, in part because there is stronger global economic growth and therefore there is higher demand, in part because there have been some negative supply shocks, like supply disruptions in places like Venezuela, Nigeria, Libya, and you name it. In part, there is also a threat of a bigger supply shock that may come if there's conflict between Iran and Saudi Arabia, that right now is a proxy war fought in other lands in the Middle East, could become a hot war between them. And of course, OPEC has been also somewhat successful, thanks to an agreement between Saudi Arabia and Russia to try to limit the supply and the production. But the big kind of game changer today, as we all know, is that there is shale gas and oil in the United States, and it's not part of OPEC. And the supply response of shale gas and oil to a rising price is very fast. If you're a traditional oil producer, you need, with higher oil prices, 5-6 years before you can dig oil from the ground. You have to spend billions. Strong fundamental reason for the public sector having a significant role in bank intermediation. If you don't want to fully privatize these banks, you could reduce your share from a controlling one to a maybe strategic minority share, to essentially partially privatize these banks and give them operational and financial independence so they can pursue maximization of returns, so that they are, even if they are publicly owned in partial term, they're subject to budget constraints and incentive like a private firm. So full privatization maybe is unlikely, but partial privatization and having this independence to pursue what's right should be the right thing to do, and maybe there's a possibility that India is going to go in that direction, and that will be certainly positive to make sure that the problems of the past of connected or connected lending and excessive credit and political distortion and credit allocation, things are not repeated again as you clean up the balance sheets of the corporate sector and of the banking system as well.
So one advice to Prime Minister Modi?
The advice will be that he has started the process of a variety of economic reforms. More need to be done, and the more those reforms occur, the more chances are that potential growth of India goes from 7% to 7.5%, from 7.5% towards 8%. But to get to 7.5%, 8%, current policies probably are not sufficient, but more needs to be done. And if he wants to pass to history with the legacy of having changed for the better India, definitely he should be continuing with the same policies in the near future, and so on.
Thank you very much, Dr. Rubini, for speaking to us. Okay, I think it's back to you, Ritu.
Thanks.
Thank you very much for that very engaging.
That was the economist Rubini in conversation with Lata Venkatesh about the global economy and the outlook, as well as giving his advice to Narendra Modi.
Moving on now, the Indian Railways has put freight-only corridor projects on the eastern and western routes on the fast track, necessary because with congesting forced delays and slow speeds, the national transporter's freight business fell 30% in 2017. CNBC TV18 travelled to Aligarh for a ground check on the progress being made on the eastern freight corridor. Here's a special report.
What you just saw was the track laying and load testing on a bridge in Aligarh. Now this bridge is part of Indian Railways' most awaited dedicated freight corridor on the eastern route, which will connect places like Uttar Pradesh, Haryana and even to the extent of West Bengal. Now as far as work is concerned, that had picked up fever pitch a couple years ago. However, the concept was first conceptualized almost 12 years ago.
Dedicated freight corridor projects of implementation of eastern and western DFCs will be closely monitored.
Given the emphasis on rapid expansion of freight business, it is essential to build more dedicated freight corridors for the increased traffic with consequent benefits for the economy and environment.
The need for dedicated freight corridors on eastern and western routes cropped up after populist budgets added over 5,000 passenger trains to a network that wasn't growing fast enough to accommodate these trains. This left less room for freight trains to ply on the 66,000-kilometer network. But getting the 81,000 crore rupees to fund these dedicated freight corridors proved to be a problem. Until the World Bank and the Japan International Cooperation Agency agreed to pump in the money following several rounds of negotiations between 2011 and 2016. But officials say the projects are now on track.
There is no delay as such because this is a part of the procedure. Unless we have the money, unless the funding is tied up, the tenders, the works cannot be started. The sections which are targeted for opening in 2018-19, the progress is around 75 to 80%. 2018-19 in Eastern Corridor, which is from Ludhiana to Dankuni, a portion of around 350 kilometers between Kanpur and Khurja will be completed, and that will be commissioned in November 2018. Similarly, on Western Corridor also, from Rewari to Madar, around 452 kilometers of the section will be completed, and that will be commissioned somewhere by January 2019.
The eastern and the western dedicated freight corridors are crucial for the Indian Railways, which is the fourth largest freight carrier in the world. For one, they're losing out their market share to the roadways, and now the Railways is banking on these freight corridors to revive their market share and bring it to 50% by 2030. And the bonus, of course, here is that these lines are commissioned and ready much ahead of the 2019 deadline.
97% of the land acquisition has been done, but getting this land has not been easy.
There were issues, but most of the issues has been sorted out. There are few issues left over somewhere in Greater Noida area, which are being actively pursued by our management with the authorities.
Problems with land acquisition are not unique to the Eastern Corridor. The process on the route of the Western Freight Corridor has seen some delays as well, with some farmers in Bengal seeking higher compensation. But the Piyush Goyal-led Railway Ministry is not giving up and is actively pursuing plans to build 4 more dedicated freight corridors to revive that portion of the railways business and make the national carrier financially stronger. With Ashpreet Sethi in Aligarh, in New Delhi, Arif Sherwani.
Pilots of direct benefit transfer for fertilizers have been underway for a while across the country. More and more fertilizers retail stores are being equipped every day with point-of-sale devices, and against every authenticated purchase, the subsidy is credited to the manufacturer. Expectations from this program are huge. Archana Shukla sent us this report which explores how this program is actually working on the ground. When we reached this fertilizer store, a farmer was struggling to make his purchase of urea. His biometrics failed to match.
सुबह गाजर खोद रहा है डा। तो क्या आपकी मतलब ये उंगलियों में जो निशान है? ये गाजर का सुबह गाजर खोद के लाए मंडी में। अच्छा। हाँ उनका वजह से ये इस पे हाँ नहीं आ रहा है। नहीं करती है। हाँ रीड नहीं करती है तो आधार कार्ड में लगा हुआ है उसको ये वेरीफाई नहीं करती है इस वजह से। खराब हो जाए अंगुली तो। ना आर्यो को नहीं को।
ऐसा आपके साथ पहले हुआ है?
हाँ पहले भी हुआ, कल परसों भी हुआ था, 3-4 बार।
कि आप खरीदने आए?
यूरिया खरीदने आया हूँ।
पर आप पहली बार ऐसा हुआ है कि
पहली बार भी हुआ, पहले भी हुआ है, पहले भी 2-3 बार हो गया ऐसा।
आप खरीद नहीं पाए हैं फिर?
हाँ नहीं, कहाँ से खरीदेंगे, आएगा नहीं तो कहाँ से मिलेगा माल।
70% होगा इतना।
70% जो आप नहीं कर पाते?
नहीं कर पाते हैं, क्योंकि मोस्ट ऑफ किसानों की अंगुलियां कटी हुई है, इस वजह से उनको दे नहीं पाते। और गवर्नमेंट कहती है मशीन के थ्रू ही सेल करना है।
The farmer was lucky this time, but is everyone even aware of getting their Aadhaar details?
Over 280 fertilizer sale points, inclusive of both cooperative societies as well as private stores like these, have been given POS machines here in the district of Sikar. Another 150 are in waiting, and they will go on stream maybe in the next 1 month. This project right now, the DBT on fertilizer, is on a trial basis in Rajasthan right now. It will only go full steam in April. But a lot of teething issues that the government needs to sort out before it goes full steam. Authentication not happening, biometrics not being read for farmers. Many a times farmers have to go back without purchasing fertilizer for their crops. And a lot of other server issues that the shopkeepers talk about. किस तरह की प्रॉब्लम्स आ रही होंगी आपको?
हर टाइप की प्रॉब्लम आ रही है मैडम। सर्वर की प्रॉब्लम आती है। दूसरी जो सबसे बड़ी समस्या जब आती है, जब हम कस्टमर को ये बोलते हैं, वो यूरिया का कट्टा लेने के लिए हमारे पास आता है, हम कहते हैं भैया आधार कार्ड दो, तब यूरिया का कट्टा मिलेगा। वो बेचारा जल्दी में आता है और वो कहता है मैं तो आधार कार्ड है नहीं, मेरे पास नंबर भी नहीं है, मैं कहाँ से लूँ, मेरे को तो यूरिया चाहिए। हमारे पास माल होते हुए भी हम उसको मना कर देते हैं। वो बहुत नीडी है, उसको 5 कट्टे यूरिया का चाहिए और वो आधार कार्ड घर से नहीं लेके आया, तो वो किसान क्या करेगा?
नहीं तो उस सिलसिले में, उस लिहाज में आप उसे दे नहीं सकते हैं?
हम उसको देते हैं, क्रेडिट पे देते हैं। वो हमको ये बोलता है कि मैं कल बाजार में फिर आऊँगा तो मेरा आधार कार्ड लेके आऊँगा, तब मेरा बिल इशू कर देना।
अभी तक हमारे पास पोस्ट मशीन नहीं आई है, अभी फर्टिलाइजर कोई स्टॉक नहीं है हमारे पास।
आपने रखा ही नहीं है?
बिना मशीन के हम सेल ही नहीं कर सकते।
कितना नुकसान हुआ होगा आपको? फिर भी अगर आप एक एस्टिमेट हमें बता सकें परसेंटेज वाइज।
25%, 30% तक हुआ है।
The biggest concern is what will be the modality of transferring fertilizer subsidies to farmers, as a refund or as cheaper fertilizers.
सुनने में आ रहा है कि सब्सिडी चालू कर रहे हैं, तो सब्सिडी अगर बैंक में लेंगे 1100-1200 रुपये कट्टा कौन लेगा? ना तो दुकानदार लेगा, ना फार्मर लेगा, कोई नहीं लेगा।
तो आपके मार्जिन का यहाँ पे प्रॉब्लम है?
मार्जिन तो सब जगह आएगा सर, क्योंकि गोडाउन है सब बाहर, क्योंकि सब जगह सिटी में तो नो एंट्री है।
इतनी महंगी दवाई होगी, वही दवाई आज कम से कम 3 लाख रुपए में पड़ेगी जब मेरी स्प्रे होगी।
ये जीएसटी के बाद से हुआ है?
जी।
Even as the fertilizer industry is keenly waiting to see the benefits which a pan-India rollout of the DBT program for fertilizer subsidies will bring, experts say that the government must make sure that the intended recipients of the subsidy, the farmers on the ground, are able to avail of it without any hiccups.
With that, it is a wrap on this edition of What's Hot, but don't go anywhere. Up next is India Business Hour.